It's not around the corner anymore. It is here. So what does that mean? It means you need to file your taxes, obviously. But going back to other things as well is, as a tax professional, I always see every year I do taxes throughout the whole year, not just from January to April. This year alone, I've already done about 20 taxes, but they've all been amended. And it's not the tax person, the person filing the taxes fault. It's the person that is preparing their stuff. That is their fault. I see too many times people make mistakes, they make mistakes on names, dependents' names, and I can't emphasize enough, that is super important when you are filing your taxes. You can't just go off somewhere and just do them and just get them done by anyone because you're just rushing to get them done. When you do that, you are risking an audit and you are missing out on money on the table, which is so crazy to me that people will go cheap on finances, but they'll spend so much more money on other things that have no value to them. Let me tell you, the worst thing you can do is go cheap, especially when you are preparing your taxes. I pulled up the article right now. According to Forbes magazine, here's don't make these 3 big mistakes this tax season. Number 1 is missing last-minute tax-saving opportunities. While it's too late to influence most of the factors that will determine your 2022 tax liability, there are still a few things you can do by April 18th tax filing deadline. 1 is to contribute up to $6,000 or $7,000 if you turned 50 or older last year to an IRA. Don't forget that. That's a huge tax credit because that's a $7,000 deduction or $6,000 deduction. If you don't have a retirement plan through work or do but meet the income limits, you can deduct your contributions to a traditional IRA, which can be invested to grow tax deferred until withdrawn. There's a 10% penalty for withdrawals before the ages of 59 and a half, but exceptions include qualified education expenses and up to $10,000 over a lifetime for a first-time home purchase. So there's different guidelines to that. But make sure you guys are reading and the person that is setting you guys up for that stuff, make sure you got all the information you need, because the last thing you want is to invest money into a Roth, a SEP, a traditional, a 401k, and the last thing you can do is withdraw money. I think, and then you're gonna look at, I invested $100,000, but I wasn't aware that there was a 10% fee. Number 2, according to Forbes magazines, is waiting to file. I find this to be very, very absurd. Too many people wait to file very, very last minute. There are it goes to say there are several reasons why taxes aren't something to procrastinate until the last minute. First, you never know when your tax return may end up being more complicated than you thought. You might need additional paperwork or other information, or even need to switch from using software to hiring a professional tax preparer, which I highly recommend is that you hire a tax preparer that knows everything, that has one of these, a degree in some kind of accounting or finance. You want someone of that caliber to take care of your finances. That is what they went to school for. That is what they spent $80,000 plus for. So I emphasize you don't go cheap on that. In that case, you want time to find the right person rather than whoever happens to be available during the busiest time of tax season. Second, the only thing worse than owing a large sum to the IRS is finding out just before the payment deadline that you aren't able to make the payment. You'll then be subject to interest and penalties as well. By filing early, you'll have more time to save up or otherwise find the cash to pay your tax bill. Well, if you have a good tax preparer, that shouldn't be necessary. Sorry if you guys hear my dog. He's just out here playing with his ball. I don't know if you you guys see him, but he's right there. But anyways, if you get a refund filing earlier, let's get your money back sooner and put it to work for you. You also often need a tax return if you apply for a mortgage or have a child applying for financial aid. Getting it done early gives you a head start on filing those forms. Finally, one of the most common forms of identity theft is for someone to file an income tax return in your name and run off with a refund. I've seen it too many times that people have stolen their identity. Too many people's identities have been stolen with their social security cards, and these people run off, and then it's hard to find those people. Run off with the refund, leaving you stuck explaining to the IRS why everything on your return is wrong. And let me tell you, when you are filing anything that has to do with fraud on your social security, it is a hassle with the IRS to explain that you have to file a police report, you have to do a bunch of other things, and honestly it takes almost a year, and the way the IRS is dealing and so behind, it could take up to 2 years. Unlike other forms of identity theft, this can't be prevented by security freeze, and it's shown up in credit monitoring because no credit is involved. One way to prevent this is to file your return before someone else can file it for you, or, which they didn't mention in the article, is get an IPPIN number. It's very, very easy. Just go to irs.gov and apply for the IPPIN number. Number 3, and I find this to be the most important one. I cannot emphasize enough on how important this one is. Number 3 is choosing the wrong person to file your taxes. With a plethora of tax software out there, doing your own taxes is easier than ever, which it is. If your adjusted gross income is $73,000 or less, you can even qualify for free filing tax software. Just be aware that these free options only cover very basic returns. So that what they mean by basic returns is they W-2s. If you only strictly have W-2s and no investment forms, they will be free most of the time. In any case, doing your own taxes isn't the right choice for everyone. If you own a business or investment, real estate, ambiguities in the tax code can make it hard to figure out what income is taxable and what expenses are deductible. Living or working in multiple states or countries, buying and selling investments in taxable accounts, or being a non-US citizen can all make your taxes more complicated and time-consuming. These are all cases where a tax professional could make sense. Yes, if you have a lot of things that you do not know how to deduct or to file on your own and you don't have a basic W-2, please hire a tax professional. But don't go cheap on your tax professional. I can't emphasize that enough. However, hiring a preparer is generally more expensive than doing it yourself. In 2021, the National Society of Accountants found the average cost was $220 for a 1040 and state returns with no itemized deductions, $323 for a 1040 with itemized deductions, which is a Schedule A, and a state return, and $778 for a business owner with capital gains and or losses and rental income and / or losses. Compare that to the software programs that are typically $80 or less for federal and state filing. For a simple return, your local H&R Block, Jackson Hewitt, or mom and pop tax preparation service should be fine. No. Your mom and pop shop, again, I don't mind those places, but too many times I've seen Jackson Hewitt, H&R Block, and regular mom and pop shops, they can file easily a W-2. It is not that hard. When it comes to business taxes, I see too many mistakes. They miss out on the a lot of times I see most common, they miss out on the QBI, which stands for the qualified business income. They miss out on child tax credits. They miss out, and keep in mind, these are not accountants. These are just tax professionals. There is a difference between a tax professional and a tax accountant. So, if you are hiring someone, I highly recommend again that they have something called a tax account. They are a tax accountant. Okay? Too many times I've seen too many mistakes, and it's such a hassle because I worked with this family. I'll give you an example. I worked with this family the other day, and they were out of $6,000, I believe it was. I think it was like $5,993 something, but we're gonna round it up to $6,000. They were missing almost $6,000 because Jackson Hewitt, the person that prepared their stuff, not only misspelled names, but they accidentally put in wrong social security numbers. You tell me if that's a huge problem. And the article goes to say, finally, you need to have a business return done. If you need to have a business return done, you might want to hire a CPA that specializes in tax preparations. Thank you, Forbes, for emphasizing that. I would highly recommend Forbes would emphasize something like that. Keep in mind that their fees tend to be the highest of preparers, so it might be overkill for just an individual income tax return. If you are also looking for more comprehensive financial planning, consider a CPA who's also a personal financial specialist, a PFS. Of course, there's a myriad of other tax filing mistakes to avoid, like being disorganized or making computational errors, but these are the three that can really cost you. Try to take advantage of remaining tax saving opportunities, get started early, and choose the right person to prepare your taxes. Then maybe tax season won't seem quite as taxing. I can't emphasize that enough. It hurts me that I have to, continue to remind people tax preparation, tax preparers, and tax accountants are very, very different. They're very different, and let me tell you, it's a hassle getting everything back done together. Is that my dog? You know what happened? He's stuck under the couch. I'll be right back. Sorry about that, and we're back. But closing arguments here. Just be prepared for taxes. I can't emphasize that enough. It's important. It's huge. It's very huge. I can't emphasize that enough, where people just go lazy on tax season and they start to stress out. They start to stress out, and they just don't know what to get done. Especially, I find it most common, and it's not regular people with regular W-2s, it's business owners who struggle the most during tax season, because they don't want to, obviously, no one wants to owe a big tax bill, no one. But there is ways around it, not owing a big tax bill. And keep in mind, my last advice is, it's not where you spend your money for the tax credit, it's where you place your money for the tax credit. But that's it for this podcast today, and I hope you guys enjoyed, and please stay tuned for more tax updates and more life financial updates. Thank you. Make sure you guys like and subscribe, and we'll see you next time.